Hey everyone, in today's video, I'm going to give an overview of the balance sheet, which is one of the three main financial statements. First, I'm going to explain what the balance sheet is, and then I'm going to walk through the line items or rows within an example balance sheet. So to start off, the balance sheet is a financial statement that outlines the value of what a company owns and owes at a point in time. Now the balance sheet is split up into three main categories: assets, liabilities, and equity. First, assets are any resource that is owned or controlled by a company, and this can include anything from cash that a company might have in its cash register to the machinery that a company uses to produce its goods. Second, we have liabilities, which are any resource that a company owes to another party, and this can include anything from cash that a company might owe its suppliers to a loan that a company might owe back to a bank. And finally, we have equity, which is the value of the resources owned by the company's shareholders or owners. Now, as you can see on the page, the formula for the balance sheet is that assets will always equal liabilities plus equity. The reason for this is that the company was able to collect its resources or assets by either borrowing money from a third party or receiving money from its shareholders or owners. So that means that a portion of the company's assets or resources are owed back to the third party, which is known as liabilities, and then the remainder is owned by the company's shareholders or owners, and that's equity. So to sum up, assets will always equal liabilities plus equity. Now that we have an idea for what the balance sheet is, let's take a look at an example statement. As I said before, the three main categories in the balance sheet are assets, liabilities, and equity. So starting off with assets, the first line item or row that you'll typically see is the amount of cash a company owns. Next, you will typically see accounts receivable, which outlines the amount of money customers owe the company for products and services that have been delivered but not yet paid for. So for example, if the company sells a customer a product, but that customer has not yet paid for that product, accounts receivable will capture the IOU from the customer. Next, we have inventory, which outlines the value of goods that a company has ready to sell, but has not yet sold yet. After that, you will typically see property, plant, and equipment, known as PP&E, which outline the value of physical assets that typically have a useful life greater than 1 year. This typically includes the value of the land and property that a company owns, as well as the value of capital equipment and machinery that a company might own. Next, you will typically see intangible assets, which outline the value of assets that are not physical in nature. These typically include trademarks or patents. Now jumping into liabilities, the first line item or row that you'll typically see is accounts payable, which outlines the value of money the company owes its suppliers for products and services that have been received but not yet paid for. So this is the flip of accounts receivable and includes the IOUs the company owes to its suppliers. Next, you will typically see accrued expenses, which outlines expenses such as wages or utilities that a company has incurred but not yet paid for. So for example, if the company pays its employees every 2 weeks, and after 1 week, the employees have accrued a week's worth of wages, but the company has not yet paid for those wages, accrued expenses will capture the wages that have been earned but not yet paid for. Next, you will see debt, which outlines the amount of money a company borrows from another institution that it agrees to pay back with interest at some point in the future. Now, if you're interested in learning more about debt, I'll leave a link in the description below to a video dedicated to outlining what corporate debt is. Now jumping into our third category, we have total equity, which once again is the value of resources owned by the company's shareholders or owners. Now to sum it all up, the calculation for the balance sheet is that total assets will equal total liabilities plus total equity. And for our example, we have total assets of $80, which equals our total liabilities of $50, plus our total equity of $30, making the balance sheet balance out at $80. All right, after watching this video, I now hope you have a better understanding of what the balance sheet is. If you found this video helpful, please like and subscribe below, and I look forward to talking to you guys again soon.